trade receivables. The opening balance of the allowance for expected credit losses for the trade receivables was 174,000 at the beginning of the year. And they indicate to us at the end of the year, this should be 126,000. Therefore, do you see, guys, that there's a decrease in this credit account? If there's a decrease in the credit account, this will result in an increase in our debtors. Right, therefore, next calculation 3.2, they've indicated to us in this scenario, the allowance was 174,000 on 1 January, and at year end it should be 126,000. Therefore, we are able to identify that there is a decrease in a credit account to the value of 48,000. Now, think about this, guys. If we credit this account, we will have to debit our debtors account. Therefore, in our impairment calculation, the debtors will increase with a 48,000, and this is our calculation 3.2. Okay, now let's refer back, and we're able to tick off our trade payables. Okay, so guys, now when we look at this, important, this is the additional information in terms of our IFRS 1, right? Okay, so let's just park that right there, and we now need to refer back to our table provided to us. Remember our steps. We need to calculate the carrying amount of our CGU. This is what we are busy with doing. Therefore, on our table, we need to determine what is our carrying amount of our CGU. Therefore, first, what will the carrying amount of our land be? When we look at our calculation at year end, look at the right side of your screen. Our land is 198,000. Therefore, we need to transfer this. Our carrying amount is 198,000. Our buildings we have transferred. Now, our plant. What is the value of our plant? When we look at our PPE note, guys, look at this. Our value of our plant will be the 5.4,547,6,580 minus the depreciation. Therefore, this 5314505. You with me? And we need to transfer this to our impairment calculation. Now, I'm going to call this B, and in my impairment calculation, I'm going to transfer this because this is my carrying amount of my plant. You see, guys, and I'm going to indicate this is in my PPE note, my calculation, and this is B for my marker. Now, guys, I know the referencing does take some time, but you know what? You will receive your marks much easier if you include referencing. Right, okay. Now, when we look at this, guys, next, our debtors. Refer back to our table. We have now transferred our land, our buildings, our PPE, not yet the IFRS 1 though, hey? Okay? Therefore, let's just quickly do this before we move on to our debtors. Now, our IFRS 1 balance at year end, which we have calculated. When you look at our calculations, remember, we need to focus on the new balance at year end. Therefore, this 221,164. Okay? Therefore, this is the new balance. Calculation 1.1.1, and we need to transfer this to our impairment calc. When you look at my impairment calc, my plant, the IFRS 1, calculation 1.1.1, and I have transferred 221,164. Right, okay. Now we can tick off the IFRS 1. I did remember this. IS2 inventory, we did transfer the 3936. Our trade receivables, we still need to transfer the 1452000. Therefore, in our calculation, we have our trade receivables before the adjustment, guys, 1452000, and I need to include my amount after the adjustment, and this will be 1500000, right? And then the creditors, when we refer to the scenario, we can transfer the creditors and this is 944,194. And let's transfer this. We have our creditors 944,194. Guys, do you see? I don't really follow the details in terms of the table. I transfer the important sections. Therefore, when I now need to focus on the amount, the carrying amount, remember this was our step number 1, the carrying amount of our CGU. I transfer these amounts 1980000. I have my buildings 2778240, but I don't need to include the plant. I don't need to include the creditors amount. I can immediately transfer this to the table in terms of my step 1. Right. Now I need to determine what is the total of my total carrying amount of my CGU. The total carrying amount 14193,387. Now I need to determine my recoverable amount. Remember, this is my step 2. Indicate to you step 2, the recoverable amount. They've indicated to us in the given scenario that the recoverable amount here in the additional information section is 13,2 million. Therefore, we can transfer this, and this is the 132,000,000. Therefore, we are able to calculate our impairments. Look at this. The carrying amount exceeds the recoverable amount, step number 3. And we have an impairment amount of 993,387, which we now need to allocate to our assets. Important, okay? But which assets? When we look at our land follows the revaluation surplus, okay? Sorry, not surplus, the revaluation model, guys. We need to follow the revaluation model, okay, at fair value at year, and therefore this is already at fair value. Our building is our cost model. This can be impaired. Our plant, our cost model, we can impair this. Our IFRS 1, this is already the present value. And remember, guys, we said that we can't impair liabilities. Our inventory, we have to follow our rules of IS2. Our debtors and creditors, we need to follow the rules of IFRS 9. Therefore, we can only allocate the impairment to, look at the left side of your screen, guys, please, to our buildings and our plant. Okay. Therefore, at the bottom of your screen, calculation 3.1.1, and I need to allocate the impairment amount, which is the 993,387, and I'm going to allocate this to my buildings first, and this will be the 2778240 on the 2778240 plus the 5314505 proportionately, guys, remember. And that total impairment relating to our buildings will be the 341030. Okay, guys, you will see I do transfer this to the table at the top, but I don't actually have to, okay, from a timing point of view. And then the balancing figure will relate to my plant. I'm going to include your balancing for my marker to be able to identify. And we need to determine the plant's value. Our total impairment has to be the 993,387. Therefore, our plant's value 652,357. Okay, 652, sorry guys, wrong columns here, hey? Let me just quickly move this. Right, 652,537, and immediately I'm going to transfer this to my PPE note. Right, PPE note, impairment through profit and loss, important. And I have transferred 652,357 and 341030. I need to indicate that this is my calculation 3.1.1. Okay, now guys, just quickly look at this. You will identify that I did not complete this section here. I'm not going to waste my time. I need to transfer what I need. I didn't complete this. And to be honest, you did not really have to do this. Why not? Because there's no other information for us to identify that we will have to apply IS 36 paragraph 105. You remember that limit. If you can't remember, please read this paragraph again. Okay. Then from a timing point of view, you need to please include your carrying amount at year end, please. You can refer to the solution. It is included in there. Let's move on to the next section.